Very good afternoon, everyone. Welcome to today's uLaw's webinar on Trust and Gender Reconciliation Demystified. And today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia. And so for friends joining us from these provinces, you are able to use these credits, apply for it on your Law Society website. And the subject line would be Trust and Gender Reconciliation Demystified. Okay? I kindly do request you to mute your phone lines and ask any questions that you may have at any time using our chat window. Once again, I repeat that today's webinar has been accredited for 1 hour of CPD credits, for professionalism CPD credits. Now, like every uLaw webinar, today's webinar has an agenda. And the agenda is to primarily focus on the reconciliation process. We've all heard of how the legal professionals have to generate and actually go through the reconciliation process on a timely manner. Traditionally, it's a monthly process that needs to happen. And we'll also talk about the differences and the data that needs to go into the trust reconciliation report as well as the general reconciliation report. And obviously, we'll look at the subtle differences between these two reconciliation reports, which is a must on a monthly basis as per the Law Society's guidelines. And once you have generated the reconciliation, it's just, figuring out how you can generate all of the Law Society's other documents that are required, such as the journals and ledgers. And we'll talk about how, what it takes really to be audit ready with all those documents, given that you have reconciled on a monthly basis. And we'll look at a simple checklist that the Law Society has provided, but we've kind of tweaked it to better serve as an audit checklist, if you will, for all legal professionals. And we'll look at what the core aspects of an audit-ready financial management process as well. I'd like to run through these slides quickly so that I can actually give you a live demonstration of different scenarios that would entail the data entry process in the day-to-day life of a legal professional and how that reflects in the reconciliation process. And we'll look at how easy it is to reconcile both your trust and general accounts and what you should keep in mind. Okay? So once again, the core aspect of today's webinar is to focus on the reconciliation process, the differences between the trust and general reconciliation, and once they have been generated, how easy it is to create these audit-ready journals and ledger documents. And last but not the least, we'll look through a quick demonstration. We'll use uLaw as an example, but any legal accounting software should ideally help you out with doing this process. Okay? So before we even get started with the whole reconciliation process, let's take the time to quickly review accounting systems. Legal accounting systems are one of the examples, but we'll specifically look at accounting systems in general. Okay, so we really start from one of the first systems that existed. You had your manual double entry system, which was a very simple, inexpensive system, but it obviously was extremely time-consuming, did not automatically post ledgers, and there were obviously quite a few errors that you had to deal with. Now, through evolution of time, we've evolved from such a manual double entry system to OneWrite spreadsheet software to even a general accounting software that is being used on at various different stages. But for legal professionals that want to be compliant and make it easier for you to manage both the Law Society's guidelines as well as manage your own business as an entrepreneur, what we've seen is taking advantage of a legal accounting software is going to help you not only reduce the amount of time that you spend in generating all these reports and documents, but also gives you a single window data entry and a reporting opportunity to use one product that can handle both, where it manages both you being an entrepreneur, does all your CRA, your HST, your taxes that are involved, as well as the Law Society guidelines with regards to the journals, ledgers, and the reconciliation process. Okay. because it was designed from the get-go as a product to handle both your trust and your general accounting. Many legal accounting softwares actually do automatic calculations and ledger postings, and also produces all these reporting documents at a click of a button. Okay? So keep in mind that when you choose legal accounting software, especially if you're a legal professional, it's one of the better choices that you're making for your business. Okay, so let's start with the trust reconciliation report and what data sets go behind generating that report, okay, and what does it really take to generate it and create this report. The reconciliation of a trust account is essentially an accounting procedure that demonstrates that your record keeping or your bookkeeping is accurate or correct or matches with the actual transactions that have happened in real life, okay? So if I were to just, make it simpler, keep in mind that as a legal professional, as someone who works in the legal industry as well as an entrepreneur, there are many transactions that happen across your day-to-day life, okay? So there's a client that shows up at your firm, so obviously you create a client, you create a file for that client based on the conflict screening. So let's assume you've done that, you've created a file. Let's take an example of a situation where you may have just received a retainer into your trust account. Maybe your business, you accept retainers, so that's a transaction, okay? So that's a financial transaction that just occurred where someone gave you a check for $1,000 for a retainer for a file that you're going to work for them. Let's assume it's a small claims matter, okay? So they just gave you a $1,000 check. Now that check needs to go into your trust account. So when you just get started with your business, or if you've been in this business for a while, I'm sure you appreciate that one of the first things that you do is you go to the bank and actually create these accounts, right? You actually have the banks generate these accounts. I think there's a quick question for someone who just joined us. The name of the webinar is Trust and General Reconciliation De-Mystified and has been accredited for 1 hour of CPD credits, okay? All right, so going back to my story around that financial transaction of a trust retainer. Now that actually happened in real life where you put the check in to the bank. The bank would reflect that a deposit of $1,000 was made into your bank account, which is actually a trust account. Now in the bookkeeping software or any system that you use to mirror that bank transaction, it could be, as we spoke about, these different accounting systems. Could be an Excel sheet, could be notes that you take on a notepad. But if you want to maximize your time, minimize the amount of time that you spend in generating these documents, let's assume you take a legal accounting software or a bookkeeping software, that this software needs to reflect the transactions that have happened in real life. Okay? So if $1,000 was accepted as a retainer and it was deposited into a bank, that same financial transaction needs to be recorded into a system or software with the same, I would say, aspects or essence of that transaction. So such as the date when it occurred, the exact same amount of $1,000. So you can't just say 800 in your bookkeeping software because that would not match between, when you reconcile, it would not match between the bank's information and your bookkeeping's information, okay? So let's say you put the same $1,000 as a record keeping into your bookkeeping software. And then the third thing is the method of payment, right? We've spoken about this in some of our other webinars. Very important to record that. At the end of the month, if this was the only transaction that occurred in the particular month, so let's say in the month of July, the only trust transaction that occurred was you deposited that $1,000 into your trust account. When you reconcile at the end of the month, what you would notice is the bank would list one transaction of a deposit of $1,000, and ideally your bookkeeping software should also reflect that one transaction of $1,000. And if you see this, that's great. You're going to just acknowledge. That's really the reconciliation process. Through that process, you're acknowledging, right, that the recording of all the financial transactions have occurred, So when you look at our 4 critical components of a reconciliation report, you've got the recording of the bank statements and balances, the recording of any outstanding checks or deposits, the recording of all of your client's trust listing, and a final trust comparison, right? So these are the 4 data components that go into a reconciliation report. You would obviously look at your bank account, whether it's TD, CIBC, BMO. You would look at month ending, what basically was the outstanding balance as of that date. You would look at all the transactions that have occurred between the bookkeeping software and your bank. And finally, when these 2 numbers match, you would obviously reconcile that, stating that you've reviewed all of your transactions between your bookkeeping software and your bank, and you acknowledge and you sign off as a legal professional that these transactions are in sync with each other. Now, life would not be ideal as it sounds in this particular example. This is a classic example, a very ideal example where nothing else has happened. Now let's throw a little bit in the mix. So let's say there were 2 transactions. You actually had a $1,000 retainer, and there was another retainer of $2,000 that happened. Let's assume that you did not tell the bookkeeping software that you received that $2,000 retainer. So what would happen at the end of the month when you look to balance and reconcile and see if the 2 systems are in sync is you would see 2 transactions in your real-life bank statement. Let's assume TD is your bank. When you open up your online bank statement and look at July, you would see 2 transactions in July. One for a $1,000 deposit for a client, and that would be another $2,000 deposit, assuming for another client. And when you open up your bookkeeping software, the only thing the bookkeeping software would know would be that $1,000 because you have not told it about that other file, the other retainer that you received. Okay? Now what you have to do is obviously go into the bookkeeping software, create that contact, that new client that you received, create that new file for that new client, and reflect the new retainer of $2,000 that you received. So this is how you would ensure you update the bookkeeping software of what's really happened in real life. Okay? Now if you were to flip the scenario, there's a really method to the madness of why I'm telling you the story, because when we actually move on to look at the demo, I hope you can use this in your memory to resonate with the demo itself. So let's flip the scenario where you actually got the second client. You were really good at accepting that retainer and putting it into the system. So you went into the bookkeeping software system, you created the client, you created the file, and you said, yes, I've just got this $2,000 check. Perfect, you've entered that into the bookkeeping software. But for whatever reason, you put that check in your pocket and you wanted to deposit into the bank account the next day, and you totally forgot about it. Okay, I'm sure it happens. It has happened before. Now, what happens at the end of the month is that that check is still sitting in your pocket, it still hasn't been deposited into the bank. So what happens at the end of the month is now, in this scenario, when you try to reconcile, your bookkeeping software would have 2 transactions. Would have $1,000 for the first client retainer and another $2,000 deposit of a retainer for your second client, whereas your TD would only have that first $1,000. Now you have to scramble to figure out, oh my God, what the heck happened? Where is that check? What did I do to it? And then as you scramble, you get to your pocket or your wallet, your purse, and then you figure out that this check that your client gave you has not yet been deposited. Now, the essence of the story is things happen. But if you can build a process or a discipline of capturing these anomalies, if you can catch them within the 30 days or within that month's reconciliation cycle, the earlier that you catch them, the faster you can, I would say, catch them and then rectify the issue. So if you caught it the next day itself, if you were to reconcile the very next day, instead of having to wait till the end of the month, you would have realized that your bookkeeping software has $2,000 more than the bank. So maybe the next day itself, you could have started scampering instead of waiting for the end of the month. So that's how legal accounting and software is moving this whole legal tech and making it convenient and making it powerful for legal professionals and enable them to really catch and rectify these reconciliation processes early enough that they don't have to scramble at the last minute. When you scramble at the last minute is when it gets a bit difficult. It's a bit of a, it's very taxing if you were to even think about it. So I just gave you an example of one check, but imagine if it's a law firm that has over 100, 200 clients a month, and if these things were to happen, sometimes the numbers can be a bit overwhelming, right? Bottom line, as you enter transactions into a bookkeeping software, the idea of the reconciliation process is to synchronize and ensure that what's in the bookkeeping software and what's in the bank as a statement balance, and there's a synchronization between these two. We'll look at some other examples of anomalies. So one is you made the mistake of not depositing. There could be other anomalies such as bank errors. I'm sure you understand as a legal professional that the trust account needs to be untouched. The only ins and outs out of a trust account, everything needs to be predominantly client-related and something that you can actually vouch for as to why it happened. But if there was an odd $6 of a bank error or a bank fee that was taken out of your trust account, it's your responsibility to catch it early, go talk to the bank, and ask them to take that $6 of a bank fee from your general account and make sure they deposit back that $6 into your trust account. So that's another example of an anomaly that may happen that may throw the bank and the bookkeeping software off. Okay. Now that I've told you the story, that's really the story that you want to capture, that the Law Society wants you to capture in data form. So recording outstanding checks and deposits. Okay. So they want you to tell if for some reason the bookkeeping software's records and the bank's records don't match, is it because you did not deposit the check into the bank? Or was it a check that you wrote? Let's say you wrote to the court for an application fee as a disbursement. You had recorded that as a disbursement expense in your bookkeeping software, but if for some reason the court had not yet deposited that within that month, it would not reflect in the bank, right? That would be the case of an outstanding deposit that you can record. At the end of the day, the two numbers match, but if for some reason they don't match, these are some of the examples of why they haven't matched, and you still need to track them and report them in that reconciliation report. Okay? Recording of client's trust listing. Obviously, you need to keep a list of all the clients, all their outstanding trust balances. That's really what this is. All the outstanding trust balances is what would amount to the balance in your trust account. Okay? So if the first client gave you $1,000, the second client gave you $2,000, you would list them. Peter Piper, $1,120. Susan Silver has another $72. So those two add up to the $1,192. Okay? So you need to provide that listing. How does the outstanding balance reflect as line items? Where did that money come from? Okay? And last but not the least, you have to compare your trust bank balance with your trust ledger, which is managed by your bookkeeping software. Okay? Now, the trust reconciliation is very important because the Law Society is very strict on the rules that govern the trust, and the whole trust transaction is very strict around how it's managed and how it's maintained. We highly recommend that you take it seriously and do it on a periodic basis, on a monthly basis. We at uLaw actually we believe we've revolutionized that by providing you the opportunity to do reconciliation every day if you want to. Okay? In addition to your reconciliation of your trust account, you also have the reconciliation of your general account. Okay? So this is where either you're moving money from trust to general to pay yourself as a trust transfer, or if you're not dealing with trust at all. So let's say you don't have a trust account, you only deal with general account, which means you don't take any retainers, you do the work, and you take the leap of faith that you would get paid after the work is done, in which case you would generate an invoice, and then whatever money the client pays you is a client payment that goes directly into your general account, okay? Or maybe you pay disbursements out of your general account. You may also be dealing with office expenses that may be coming out of that general account as well, okay? You may be paying for your rent, you may be paying for your stationery, all of that comes out of the general account as well. But the bottom line as a reconciliation report, it's still an accounting procedure that demonstrates that, again, what's in the TD bank in your general account and what's in your ledger of your bookkeeping software balance, and they synchronize. Now, if you can see, there's one data component that's lesser in the general reconciliation compared to the trust. So there's only 3 components. There is obviously the bank statement that was similar to your trust, outstanding checks and deposits. So if let's say there's you provided a same example. You did a disbursement out of your general account, has not yet been deposited, then you would actually track that, and that would be the reason why there would be a difference between the bookkeeping software and the bank. Now the third, obviously, is the comparison between the bank and the ledger. That's exactly what we saw in our previous trust comparison. We call it the bank and ledger comparison in general, or you can just call it a general comparison. What it doesn't have is a listing of your outstanding balances of your trust account. So step 3, which is the client trust listing, is what's missing or not required in your general reconciliation report. Again, I do apologize if that story was a bit overwhelming, but the idea was to convey the overall essence of what really happens on a day-to-day basis and how reconciliation is important, but it doesn't have to be a scary aspect. Okay? So how do you prepare for your reconciliation as a legal professional in today's business, right? 21st century going on to the 22nd, the advent of technology, utilizing all that and knowing what you know today, how can you best prepare yourself? What we believe is if you can actually use a system and have the discipline to track every financial transaction that happens as and when it happens, okay? If you use legal accounting software, I'm going to say this again, it's far more easier to reconcile, but it's not a mandatory need. You can still use Excel sheets, you can still use Word documents, but obviously the amount of time required to reconcile would then be higher because some of the automation would be missing there, right? But the bottom line is you obviously need to know the date of the reconciliation. Now, the Law Society recommends that you reconcile the 26th or around the 25th, 26th of every month. But you can actually reconcile at the end of every month. So you can pick a date of 30th or 31st and then reconcile at the end of the month. But whatever date you reconcile that month is what you have to choose with your bank as well. Okay? Because if you're having transactions happening every day then becomes important. So choose what the date of the reconciliation is. Know what the bank balance is. Obviously, when you open up your TD, RBC, CIBC, BMO account, if you choose June 30th as your reconciliation date, let's say you're going to reconcile your end of month June, if you choose June 30th, then the bank would obviously tell you the balance as of that date, and that's what you would enter. And the last but not the least, you would then start to mix and match or match the transactions that reflect in your ledgers and your bookkeeping software and compare it with the transactions that have been recorded in the bank. And then through the process of matching, figure out whether you need to update your bookkeeping software or make some changes of deposits or anything like that into your bank. And if it's too late, so let's say you reconcile end of the month and you realize that $1,000 that you gave out to your, you provided a disbursement of $1,000 and that has still not been taken out of your bank, you would put that $1,000 as an outstanding deposit, and that's the reason why the bank and your ledger is off. So it doesn't exactly have to be the same numbers, but they all have to add up to become the same numbers. And the missing components can then be justified, for lack of a better term, as to whether it was an outstanding deposit, outstanding withdrawal, or what was the exact justification for why the two accounts are off. Okay? So we'll get into a quick demonstration of this so that it's easier for you to appreciate it. But I'll leave you with these last few slides that really emphasize the need to reconcile. Okay, why is that important? And can it be a mechanism that I can depend upon to make my whole business audit-proof? Right. Primarily, we believe reconciliation is designed to catch two main issues. Okay, number one, the transactions that you have in the ledgers of your accounting or your bookkeeping software, if there are any mismatches between that and your bank records. We spoke about that earlier examples. The other is it catches all the bank transactions that you forgot to enter into the accounting system. So either there's a mismatch with the bank of a missing deposit or a check that's in your pocket, or it's the first example that we took, you put the check in the bank, but you've still not reflected into the accounting system. So by doing this more often, the sooner you do it, the better your memory, and the faster you're catching the issue and being able to respond and rectify that issue. Okay, that's the bottom line. Be proactive enough that you can do it way ahead of time, even before the end of the month. Let's assume you have done this. What's the reward? If I've been a very disciplined legal professional, yes, I do this, on a very regular basis. I do it every month. I even do it every week, every day, whatever discipline you have. Why do it? What is the reward for being that disciplined legal professional? One, you're ensuring that your accounting system is up to date, both from a trust as well as a general accounting standpoint. Okay? You're audit ready. We can guarantee you that if you've actually done your monthly reconciliation right, generating the ledgers and journals are just click a button or generating a report, because you can always time travel and you can go back in time to generate these reports, provided you have reconciled that month. Okay? You are even ready to file your taxes with the CRA, because with reconciliation, you have now firmed your revenue, because you've said, yes, that's the amount of money that I should have received and have received over that month. So you can, if you were to accumulate the 3 months, whether it's CRA, whether it's HST, you have firmed up the numbers, okay, enabling you to do that with confidence. And obviously you can generate a lot of analytics about the health of your business, right, as well as have a better understanding of where you are heading towards. Let's say you have a target in mind. You want to earn $100,000 this year. You want to earn $150,000 this year. Having a reconciled accounting system is going to give you real numbers to deal with. Okay? If you've not reconciled, you're not quite sure if that $1,000 deposit happened or not. So you're not quite sure if you should warrant that $1,000 of revenue or not, right? So it leads to all those little confusions. But if you've done your reconciliation, you know for a fact whether you've deposited or not. If you've not, then you definitely account it as not being part of your revenue, right? That's the worst case scenario. But you know for sure. You're not guessing or thinking about it twice. Last but not the least, you have a peace of mind. You continue to go on with your work. You're very confident about being a legal professional, because there's a lot of stigma, there's a lot of fear factor, there's obviously a lot of seriousness around reconciliation and the impact that leads to if you're not reconciled. Okay, many examples in the last few months across Canada are led to believe that if you've not reconciled, if you've misappropriated, and right, there are many bad examples that we've seen, then obviously that's really not good. Not good for yourself, for your firm, and for the legal industry in general. So it really gives you that peace of mind. All it takes is a simple discipline, and it's, again, when I say discipline, it's not a big deal. It's just a simple way for you to record transactions as and when they happen, and use the right tools to make that happen. Okay. So let's get into an actual demonstration within the next 20-25 minutes that we have, and let's walk through the entire example. Okay, we'll look through reconciliation reports, but we'll also take some real simple examples of data entry opportunities that you have on a day-to-day basis. Okay, this particular webinar, again, on trust and general reconciliation demystified, will be recorded and will be available end of Monday next week for you to review. I would also highly encourage you to visit these sites, and we'll be happy to share these links with you as well. If you're a uLaw user, these are all within the product already as checklists, but the audit checklist and the bookkeeping guidelines are a fantastic read for those who have not reviewed it. It really walks through each and every requirement, and gives you very good examples of how you can deal with it. And before I jump into the demonstration, for those who don't know who we are, we're a very proud Canadian legal accounting and practice management software company built purely to make legal compliance in Canada a breeze, cost-effective, and convenient. Okay. We're based out of Ottawa. We're cloud-based, and we have, through our mobile apps, we now provide you anytime access to information and make legal compliance a breeze, as I said. There's a click of a button for you to walk you through that. If you've not tried us out, we do have a free 30-day trial, no obligation sign up, similar to Netflix, and do check us out at uLawPractice.com. Okay. Now let me quickly log in to my uLaw account. So I'm logged in as a fictitious legal professional, Roger Moore. Okay, so let's assume that this is your day-to-day life with any system. We're just going to use uLaw as an example and walk you through how we make legal compliance and reconciliation simple. So we spoke about the example of accepting clients. So, we're on the 27th, so I'm sure it will be okay and fair to accept that there would be quite a few transactions that have occurred in the month of July so far. This is an active site that I use every day to do demonstrations, so there's quite a bit of transactions that should have happened in both my trust and my general account. So let me just show you that so that you know, and then we'll start to enter data, and we'll see how that falls into the reconciliation space. Okay. So on a daily basis, in fact, we encourage our clients to actually check if they're compliant or not. So by clicking compliance, and let's do trust reconciliation. I'm going to first show you the month of June. I'm going to say 30th of June. All right, so when you see no transactions or no ledgers show up, obviously that means that we have reconciled all these transactions prior to this date, so we're up to date with all transactions. So the only month that has not yet been reconciled is the month of July, and I'm choosing the date 27th. Now there's an important differentiation between the color in blue and what's in black, and this is something very unique to the product uLaw, is we allow you to do what we call as a preview. So instead of doing a monthly reconciliation, our clients actually do a daily or a weekly preview, which really is catching up with transactions on a daily or a weekly basis and then just saying, yes, I have confirmed that this transaction exists, I have confirmed this transaction exists, so on and so forth. And they do it on a daily basis, and then they wait till the end of the month once it has added all transactions, and then do one final reconciliation report. But in the meantime, they do what we call an accumulated preview of transactions as and when they happen. So we have few clients who actually do it on a daily basis. And what uLaw does is we tell you when you come in, and if you're catching up this particular week, we tell you that you have already confirmed to us that these transactions existed through a preview, and the line items in blue clearly indicates that you have done this. So in a way, you can blindfoldedly click that. If for some reason this transaction was not on the 21st, was on actually the 24th, you can still make that change. The ones in black have not yet been previewed, have not yet been reconciled either. But just to give you an example, there's about 14 transactions that have occurred from the 9th of July till the 26th of July. Okay, so no transactions for today, and there are 14 of them. Likewise, let me show you I'm going to choose a general account, and you're going to notice that I just have one transaction for the month of July, which was a expense for a Starbucks meal that occurred on the 13th of July. That has already been ledgered, meaning the bookkeeping software uLaw here knows of this one particular transaction that has occurred. And the reason why that it's in green, again, is another unique aspect, is you have our client who uses this has imported this right from the bank. Okay? With that information, let's go into a simple example. I'm going to create a client, I'm going to create a file, and walk through the nuances of that file. We'll accept a retainer, we'll generate invoice, we'll put the dockets in, we'll do disbursements both out of trust and general, so you would know money coming in and out of the trust and general accounts. Okay, everything happening today, which is the 27th, so we'll see how that quickly flows into your reconciliation. Let me go ahead, first step, add a client. Let's say Johnson, I'll say it was a client referral. Let's say it was a home address. I'm going to click Save and Matter and jump really into creating a file for Steffi. Obviously, with uLaw, we allow you to do your conflict screening and all the good stuff before you determine if Steffi is a client or potential client. In this case, I'm just going to go right into creating a file for Steffi. Okay. Let's provide a simple title to what this particular matter or file represents. An area of practice, so let's say it's a small claims matter, and my most popular issue in today's context is the fence issue, no pun intended. And I'm going to save that particular file. Now, for the purposes of this demonstration, let's agree that there was a $1,000, well, let's come up with a unique number. Let's come up with, today's the 27th, so we'll say 1027 as a retainer. So let's assume Steffi just gave you a check. Okay, someone just said $1,000, so all right, perfect, we'll take that cue. Let's say we've got that $1,000, okay? If you are the person who's going to enter the data after it happens, so you have the bookkeeping software in front of you, you have Steffi in front of you, and uLaw also allows you to accept retainers through a credit card, right? So let's say you do it on the 27th. You've got the $1,000. And let's say I'm getting a check of 897, and I'm putting it into my trust account. So I'm basically ledgering this into my bookkeeping software that I received $1,000, and I've either planned to put it into my trust account, or you may have already done it, and then you're telling me today, or telling me later in the day that you already put it in. Okay, and you give Steffi a retainer receipt for that $1,000. Okay. So now what's really happened is the bookkeeping software uLaw has just been told that $1,000 has been added into the trust account. So it kind of believes that, or hopes that's the same situation with the bank. At the end of the day, you can always go into accounts, document generation, compliance, and if you look at our reconciliation, now you see 15. Before it was 14, now it's 15 because of that third transaction that just showed up, brand new information. On the 27th, you got a retainer from Steffi Johnson for $1,000. Okay? I hope you're following me here. So as soon as you entered that you may have received that retainer, we have obviously captured that as a potential reconciliation line item. Now, let's continue with traditionally what you would do to manage a file and make money, right? You would dock it. Let's say I got an initial client meeting. I'll click description. I'll say meeting with the client. Discussed matter. I'll even make them bulletized to make it look good. I charge, $400 an hour, and I'm going to say I've spent 2 hours. I'll say I've spent 2 hours on this file, but because Steffi's a friend, I'm only going to charge her 1 hour. Okay? So you're just going through the motions of the file. You've got a retainer, now you're docketing. Let's do a couple of disbursements. So let's first say that I'm actually going to do a trust disbursement. So I'll go into my trust, I'll withdraw from it because a disbursement is an expense paid on behalf of the client. Now you can use both your trust account and your general account depending on your scenario. Here I do have money left in trust, so I'm going to use it. So I'm going to say I'm going to pay a disbursement right out of trust. It was for $200. On the same day, it was a check that I wrote to the bank. Sorry, not the bank, to the application. So let's say Ministry of Finance. And this is coming right out of my trust account, my CIBC trust account. I can even print that check. So here's $200 that's going to be taken out of my trust account directly. And now I'm entering that as a financial transaction into my ledger or bookkeeping software. Okay? I've just recorded that financial transaction that I'm assuming actually happened in real life too. And let's go back into my accounts. Compliance, trust reconciliation. Now what you see is there are 16 transactions. Interesting. So here are all. So not only did you have the $1,000 coming in, but now you have a $200. The other transaction is really the next page. So there it is. So here's the $1,000 for Steffi Johnson, but you actually just made a disbursement payout for $200. So uLaw has just now captured both money coming in and money going out. If this actually happened in real life and your bank can reflect the same numbers, fantastic. Okay. Now let's do a general disbursement just to give you a flavor of things. So let's go into my general account. I'm going to withdraw from trust and I'm going to pay, general. I'm going to say it's an actual. I'm going to say it's a court fee. And for whatever reason, I decided to pay my court fee of $200, tax exempt, out of my general account. Okay, because I forgot my checkbook for my trust, whatever. So I paid this to the Attorney General. And I'm basically using my general account court fee of $200. Okay. So there's about 148 left. I'm going to go ahead and generate an invoice. And recover that $200. This is something that you do on a day-to-day basis. So I'm just trying to create these scenarios and then show you how easy it is to reconcile as long as you've captured these financial transactions. Perfect. So you've got a docket for $400. You've got a couple of disbursements, one from your trust for $200, right, for your application fee, and the other one was a court fee coming out of your general. If you were to look at the actual ledgers, you have about 652, that's 400 plus the 252 in trust, or rather 452 in legal fee and 200 in the trust, ready to go from your trust transfer, and the previous 200 taken right out of your trust account, leaving your trust receipt at 800. Okay, so let's go ahead and do the trust transfer for my eligible pending trust transfer. So it's 200 that I did through my general, because the 200 that I did out of trust was taken right out of trust. So let's not worry about that. So I'm going to actually do a trust transfer from my trust account into my general account. And let's say I did an electronic fund transfer. I'd quickly even fill a Form 9A and download it. It's as simple as that. And last but not the least, let's refund this retainer because we're not going to use this 148. I know it doesn't happen all the times, but let's go to trust and withdraw from trust as a refund of the retainer. Exactly, you will notice that it's 148. And let's write a check to Steffi of 148. Okay, I hope you're with me so far. I know we've done a bunch of financial transactions, and we've recorded that in the bookkeeping software. And let's assume for simplicity that these things also happened in real life. Okay, the exact same time period. Got the $1,000, got a $200 payout trust disbursement, $200 general disbursement. You actually had a retainer refund of 148. And you've also done a trust transfer of 652. Now this matter is done. So you can go ahead and close this and be happy that you're done with this matter. So you would continue down the process, right? So let's say you did this and this is the only file that we dealt with today. What uLaw enables legal professionals is to actually do a reconciliation check, if you will, or a preview, as we call it, on a daily basis. So at the end of the day, you can just go and have a look at all transactions that have occurred at the end of the month, or till the end of the date. Okay, so let me look at all the transactions. All right. So on the 27th, if you noticed, we had the $1,000 deposit into a trust account. The right-hand side column is deposit. The one here is the withdrawal. The $1,000 was deposited, as you know, and then you had $652 that was taken out of my trust account for $652. That was the withdrawal. Another $200 was originally withdrawn as a trust disbursement, and then another $148 was withdrawn because of the refund. So you have the actual reasoning for that. Now the mirror of this, it was withdrawn from here, but where did it go? because if you've withdrawn it, it should have been deposited somewhere. So you should see these 3 transactions occur as a deposit in my general account, right? So if I go to my general reconciliation, if I go TD, originally I only had okay. Not quite sure which account I used, but I'm going to choose the CIBC account to see if that's where it reflected. We'll just give it a minute. I apologize. I'm just going to quickly check my internet. In the meantime, let's look at that Form 9A. Look at the invoice as well. It's just that my general account for this particular account, because if it's a playground account, has gazillion records on it. So I'm not going to. There you go. Too many transactions to deal with. All right, so let me close out. And choose my TD. There you go. That makes more sense. So originally we only had the one Starbucks, if you remember, but now we had the 652, which was the trust transfer, which was done. And if you remember, we had a court fee, which was withdrawn from. But these are the 2 transactions that you saw on the other side of the fence. Okay? So hope you've got a fair understanding of how a day-to-day activity reflects in a reconciliation scenario. Okay? And that's the whole point of me going through this demo, is as you record financial transactions as and when they happen in real life, this is how it flows into a reconciliation scenario. Okay? Now what you can do is, traditionally the old school way is to wait for the end of the month and then spend 5 hours just looking at each transaction between what's in your ledger book or your bookkeeping software, something like this. And then you can take a printout of your bank statement and then just go one after the other and find out if you've missed any transactions. Instead, wait for the end of the month. We give you the opportunity to just review it end of the day. So end of the day, you come in and I'm going to say, let's first reconcile your trust account. Okay. So let me first do my compliance and do my trust reconciliation. Let's say I've come to the 27th. So I'm going to say, all right, I've opened up my TD account bank, and I'm going to say, yeah, all these transactions, I'm going to assume I've already done a preview, right? So I'm going to confidently check them all off. But now I come to these last 2 transactions. In fact, there are 3 more. Okay, so here are everything that happened on the 27th. I'm going to open up my TD account. I'm going to say, all right, was there a $1,000 deposit on the 27th? Yes. Was there a $652 withdrawal? And this was the trust transfer we did. And this should technically reflect in your bank as well. Now, you can always change the bank date. So if, let's say it was not the 26th, it was on the 27th, you can always change the bank dates. Okay? Because that's another thing that may differ. You may have deposited it, but it may only reflect a day later. Likewise, you go through the 148, there was a refund. This should have been withdrawn out of your trust account? Yes, check. Last, a disbursement for the court fee or the application fee should have been showing as removed or withdrawn from your trust account. Check. You're still on the 27th. You still have 2 days in the month of July. You can technically reconcile your bank of trust on the 31st. But to show that you actually put the effort that you have now reconciled on a daily basis, instead of generating a reconciliation report, we allow you to generate, and you put the balance on the 27th. Let's assume the bank balance is that. These two match. Instead of generating a reconciliation report, which you do on a monthly basis, on a weekly or a daily basis, we give you the opportunity to preview. Preview is as good as a reconciliation statement, but the ledgers are not set in stone. It's just giving you an opportunity to catch up on a daily basis. So when time comes to end of month, so let's assume you're on the 31st, and no other transactions have occurred, right? What happened on the 27th is really what's left over on the 31st. No other transactions occurred. They all remain to be the same. You would just go blindfolded. How easy it is. You've done this work on a daily basis, so you know you're not scampering in the last minute. At least these transactions you've already covered for, right, through that preview, including the ones on the 27th. You do that, you actually enter the actual balance, assuming this was the 31st. And now generate one report at the end of the month and say reconciliation. And this particular document is your monthly reconciliation statement, trust reconciliation statement for the month of July. Okay? And let me first open your preview. So a good example is, let's say in a month you have 4 weeks. So we have clients who do 3 previews for the first 3 weeks of the month, and a 4th report is a reconciliation, which includes the first 3 weeks of preview and the 4th week's transactions in one document. Okay? There's a few clients who actually do reconciliation previews with uLaw on a daily basis. So the closer you are to these transactions, the more confident you will be of catching any errors and rectifying them. Okay? So that was a preview. Here's the actual reconciliation statement, just like how the Law Society requires you. If I were to look at my reconciliation requirements, so here are the 4 different documents. This was taken right off the Law Society's bookkeeping guidelines. Okay? And let's look at our reconciliation statement. You've got your trust account. We've got the closing balance, the final balance of it. We go one step further to even tell you all the cleared transactions for that month. And here's the complete trust listing. So how did you come up with 286,020 as the balance? It's because of the summation of all these outstanding trust balances across these innumerous clients. All this adds up to that 286,000. And last, a trust comparison as of this date between the bank and your ledger as per your bookkeeping software. Okay? Same thing happens for your general. Let me choose the account. So you've got this one expense and these 2. Now let's say you had a few more expenses, and let's quickly import a bank statement with expenses. Okay? There's only 3 transactions that have occurred in my general account for the month of July. But the last day of the month, let's say I do an import of all my expenses, office expenses that have occurred through general account. Let me give you a final example, and I'll leave you with the reconciliation report for that. Okay. Okay, let me say action. I'll import my bank statement into my general account. And I'll say the month of July. It's a TD that I have. So you notice you've got that 1271 Starbucks on the 13th already imported. So I'm going to import the $453 that happened earlier this month. So this is a faster way of entering data or ensuring that what's in your bank and what's in uLaw are the same. So these are all bank transactions that I've imported into uLaw now. There's a Walmart transaction. I'm going to say it's an office expense of $88.60. So I'm bringing all these transactions into uLaw. These are office expenses, not related to client. These are all office expenses. So I'll say office expense. There's a $51.94 Tim Hortons. Chapters. So instead of entering this data one at a time, you basically just import the entire bank statement as of that month and quickly just tell us what it was for. All right, everything is done in that list. Now let me go back to my reconciliation. Now if you notice, here are all those transactions that got imported, and that's why it's in green. And here's that one preview that I've already done. The only thing that I have to check for is this one in black. So if you really are a very confident uLaw user, you would know that the ones in green and blue, you're pretty much confident. You're just basically just going to check. Because the ones in green are already in the bank. You don't even have to worry about that. You can worry about this one in blue, which you've previously previewed. And you're like, yeah, perfect, this is available. So this is when you open up your TD general account. Now you would see all these transactions as withdrawn from the general account as expenses. You would see this one deposit, technically speaking, for the month of July for $652. And then you would see another $200, which was your court fee, money taken out of. Just like your trust account, you would then do your bank balance, and you can do a preview, or you can just generate a reconciliation, a general reconciliation report. Just like the Law Society requires it, here's section 1, which is your closing balance, all of your reconciled transactions, and the total reconciled. Okay? So your trust reconciliation, and your general reconciliation. Okay? So as I wrap up this webinar, the bottom line that I want to highlight once again is capturing data of financial transactions that actually happen in real life in a accounting or bookkeeping software, which leads to ledgers, ensuring that the transactions between these two systems match, or if there is a mismatch, you're going to justify it by telling why it is mismatched. And typical examples of mismatch could be outstanding deposits, outstanding checks, and bank errors. Okay? And if there are any mistakes that you have done, human error of either not reflecting the accounting software or having missed out on depositing checks that were left in your pocket, the earlier you can catch those errors, the faster and the earlier it is for you to rectify them. And if you can use a preview mode on a daily or a weekly basis, depending on the frequency of transactions that you have within your firm, it gives you yet another opportunity to review these transactions, stay on top of it more closely. So when time comes to the end of the month reconciliation, often because you've done so much work ahead of time, that final click at the reconciliation end of the month is mostly just a 5 or 10-minute work. As you know, we were told back home when we were studying, if you can actually study every day coming back from school, then when time comes to examination, you don't have to study the last minute. I know it's a very poor analogy, but the closest I can give you is that. If you make that little bit of an effort to do it every day, every week, when time comes to the examination, which is the end of the month, it would just be easier for you to reconcile those accounts. You would be very familiar because you already know, because you've already done that earlier in the month. Okay? And I hope this helps demystify a little bit about trust and general reconciliation and how such transactions automatically flow into a reconciliation scenario, what the components of a reconciliation document are, and how easy it can be to generate these documents. If there are any questions at this time, I would love to take them, me and my support staff. And I do thank you for joining us today, though it was an earlier time from traditional times that we have for webinars. Again, today's webinar's topic is Trust and General Reconciliation Demystified, and it's for 1 hour of professionalism CPD credits. Thank you, and I'll wait for any questions that you may have. Okay, well, if there aren't any questions, I thank you for your time. I appreciate you participating in today's webinar. This webinar will be recorded and available to you on our YouTube channel end of Monday next week, and we look forward to seeing you at our next webinar. Thank you very much.